What we've been seeing in markets over the last couple of days is an increase in confidence, and that's being driven, in our view, principally by what's happening in the United States, where we're seeing a bit more confidence in the housing industry, and I'll talk about that a bit later, but also in China, where growth of 7.4% over the year to the September quarter, but more importantly, 2.2% real growth in the September quarter compared to the June quarter is indicating a number of things. First off, that the Chinese economy is really not slowing down much faster than what the authorities expected. For the last 3 to 4 years, the authorities have said they'd like to see economic growth in the order of sort of 7.5 to 8%. They're getting it now in that order, and it looks as if it's quite sustainable at those levels. Importantly, though, we're also seeing in China that the growth is increasingly coming from the consumption sector. So the private households are continuing to spend quite strongly. So even as investment and exports are pulling back, that shift towards more consumption, which will be good both for the Chinese economy but also for the United States and Europe in terms of getting more consumer goods into China, that's now starting to work. The other positive thing we've seen out of the United States is the housing sector now looks as if it's bottomed out. It's going to be good from a number of points. First off, activity starts to pick up. Housing activity in the United States is probably running at no more than, say, 2.5% of the total economy. More regularly, it's in the order of sort of 4 to 5%. So we're going to see an upswing in activity, we believe, in the housing contribution to growth in the United States economy. House prices seem to have at least bottomed out, and a number of states are now starting to rise. That's going to be good for consumer confidence. But the rise in house prices is also going to help their banking system, because at the moment, many of the mortgages there are underwater. In other words, people are owing more than the house is worth. That's now starting to move in the other direction, and that'll be good news for the banks in terms of their profitability. It's also going to be good news in terms of investors' confidence in their major banks. And also the news that sort of came out of Australia, where the Reserve Bank decided to cut interest rates by a further 0.25%. And again, we'd be seeing that starting to help confidence, but it is really going to take, we believe, more understanding of the improving conditions in the United States and China. But those two things, we believe, are now starting to happen, and we think that's sort of going to help to underpin our share markets, particularly our banks, and increasingly we believe that the businesses involved in the housing sector and in the big resource stocks. Thank you.